The Westpac Melbourne Institute Index of Consumer Sentiment fell by 0.9% in October to 83.7. That's still a deeply pessimistic level. It follows the 3.9% jump we saw last month, but at 83.7, it's still incredibly low, comparable with COVID, comparable with the GFC. But there was a different story in this survey than we've seen in the past. In the past, it's really been about inflation that's been driving down confidence. This time, I think interest rates are playing a much more important role. What we can do with the survey is that we can look at the responses before the Reserve Bank decision, which occurred on the second day of the survey, and after the decision. We had 476 responses before, and the balance of the 1,200 survey after the RBA announcement. Now, bear in mind that at the time, the market and the media was telling people that the RBA was going to raise by 50 basis points, which would have been the fifth consecutive increase of 50 basis points. So when they only went up by 25 basis points, we saw a lift from the pre-confidence level of around 77 to the post-confidence level of 88. So there was a big change in the makeup of the index as a result of the Reserve Bank providing that positive surprise on interest rates. We still saw 54% of respondents expecting rates to go up by another 1%, but we saw some very interesting information on the housing market, where the Westpac House Price Expectations Index fell by 1.5%, but in the pre-post comparison, we saw a 27% jump, indicating that house price expectations are so sensitive to interest rates. So as we go forward and we expect to see 4 more rate hikes of 25 basis points, they are going to start to weigh upon the consumer, and we can't really expect to see much improvement in these very deeply pessimistic numbers for quite some time.